Welcome back, Econosite viewers. I'm really thrilled to have you here for this explainer today, because we are unpacking a totally fascinating, complex, and honestly, incredibly important economic story. We're going to look at India's 12-year economic transformation, the systemic reforms that have completely reshaped its landscape, and the highly ambitious but definitely difficult road ahead to a $10 trillion economy. So let's just dive right into this, because the story of India right now is really a story of intense contrasts.
Right off the bat, to understand the big picture, we actually have to start by looking at the local reality. We're exploring what economists like to call an India within India. You know, we so often talk about the Indian economy as this one giant singular monolith, right? But the reality is, your economic experience looks vastly different depending on where exactly you live. In fact, 5 specific states, Delhi, Gujarat, Karnataka, Telangana, and Tamil Nadu, have already crossed the World Bank's global upper-middle income threshold. They've hit a major global wealth milestone that the country, as a whole, just hasn't reached yet. To put that geographic economic divide into perspective, the global upper-middle income threshold sits at $4,636 per capita. But the national average for India, well, that remains at just $2,760, which keeps it broadly classified as a lower-middle income economy. So the absolute crucial takeaway here is that as we discuss these massive national growth numbers today, we've got to keep this stark micro-level disparity in the back of our minds.
Section 1. Escaping the Fragile Five.
Okay, so to understand how India actually plans to bridge that divide and hit the $10 trillion mark, we have to rewind and look at the macro story of national policy over the last 12 years. Think back to 12 years ago. The economy inherited by Prime Minister Narendra Modi's administration was in a vastly different state. India was grouped among the world's fragile 5 economies. It was actively struggling with high inflation, a widening fiscal deficit, really weak investor confidence, and what a lot of people termed at the time as policy paralysis. Fast forward to today, and wow, the macroeconomic picture has shifted dramatically. India is now the fastest-growing major nation and has transformed into a critical destination for global capital. That is a massive pivot.
Section 2. The 5 Pillars of Modinomics.
So, you're probably wondering, how exactly did that dramatic pivot happen? Well, economic outcomes are influenced by a ton of different factors, obviously. But economists really point to a specific systemic engineering framework that was put in place, a model widely known as Modinomics. And rather than just relying on, short-term headline-grabbing measures, the government's approach heavily focused on a chronological rollout of massive structural systems. Starting from that fragile baseline back in 2014, we see the introduction of the Insolvency and Bankruptcy Code in 2016, the massive GST rollout in 2017, all the way up to the implementation of consolidated labor codes in November 2025.
Now, these systemic changes can essentially be broken down into 5 fundamental pillars. And these pillars are heavily centered on formalization, digitalization, infrastructure creation, and a serious pivot toward manufacturing-led growth. Let's walk through each of these 5 to understand exactly how they fundamentally changed the mechanics of the Indian economy.
The very first pillar is the Goods and Services Tax, or GST, which rolled out in July 2017. Now, we all know the rollout was notoriously difficult. Businesses really grappled with the compliance requirements, the shifting tax rates, and, of course, those initial technological glitches. But here is why it ultimately matters. GST achieved something that had literally eluded policymakers for decades. It replaced this incredibly complex, messy patchwork of state and central levies, and by doing that, it created a single common national market, which drastically reduced interstate barriers and smoothed out supply chain efficiency across the entire country.
Moving on, the second pillar tackles what was arguably one of India's absolute biggest economic bottlenecks, bad loans. For years, Indian banks severely struggled to recover money from defaulting borrowers. That led to incredibly stressed balance sheets and basically a total freeze on lending. The 2016 IBC stepped in and shifted the balance of power right back to the lenders. It created a strict, time-bound framework for resolving corporate distress. Now, while resolution timelines have admittedly missed their targets sometimes, the crucial point here is that it fundamentally changed the corporate culture around debt repayment and accountability. It allowed banks to clean up their books and restart the lending that actually fuels broader economic growth.
All right, the third pillar, and this is the one that has probably touched the most lives directly, digital public infrastructure. The trifecta of Aadhaar, the Unified Payments Interface or UPI, and direct benefit transfers combine to create an entirely new digital backbone.
This system ensures government subsidies reach beneficiaries directly, which massively reduces leakages and completely cuts out intermediaries. Plus, UPI has turned India into one of the world's leading real-time payments markets. This digital foundation is driving rapid formalization, it's bringing millions into the financial system, and honestly, it's now being studied by other developing nations around the world as a blueprint for inclusive growth.
Then we have the fourth pillar, which gets a bit less buzz but is potentially completely transformative, the labor codes. After years of really intense political debate and delays, 29 highly complex central labor laws were finally consolidated into just 4 codes in November 2025. The economic logic here is simple but incredibly powerful. Simplifying these regulations aims to encourage firms to expand and hire workers formally, rather than staying artificially small just to dodge heavy compliance burdens. For a country with such a massive, young, and rapidly growing workforce, unlocking formal job creation is absolutely essential. Finally, the fifth pillar marks a huge strategic departure for India. For a long time, India really relied on services-led growth. Now, through initiatives like Make in India and Production-Linked Incentive or PLI schemes, we're seeing a massive, deliberate shift toward manufacturing. India is actively trying to attract major investment in sectors like electronics, semiconductors, and renewable energy. And they're really catching a tailwind here, capitalizing on the global China Plus One trend where multinational companies are scrambling to diversify their supply chains. The recent capital flowing into electronics and advanced manufacturing strongly suggests this pivot is actually starting to yield some real, tangible results.
Section 3. The Unfinished Economic Agenda.
So those 5 foundational systems we just talked about, built over the last 12 years, they are now largely in place. But as we pivot our narrative to the future, economists are sounding a bit of a warning. They're saying the next phase of India's economic transformation might actually be way harder than the first. And this brings us to a really critical question for all of you watching. What actually stands in the way of a $10 trillion economy? If the foundation is laid, what's the bottleneck? Well, the reality check here is that the easy structural reforms, the ones that could essentially be implemented from the top down through systemic digitization or broad financial codes, those are mostly finished.
The hurdles that loom ahead now are deeply complex and historically very stubborn. We're talking about politically sensitive issues that have, quite frankly, defeated multiple governments in the past. Land acquisition remains a major persistent roadblock for both industrial and infrastructure projects. Agricultural marketing reforms, they remain completely unfinished after previous legislative pushes were withdrawn following widespread protests. Then you have the systemic judicial delays and contract enforcement issues that constantly act as a drag on business confidence. And finally, privatization and asset monetization remain largely incomplete, leaving some huge open questions about just how much the state is actually willing to step back and let private capital take the lead.
Section 4. What global investors want. But the thing is, private capital taking the lead is exactly what is needed next. To make that huge leap from $4 trillion to $10 trillion, India needs massive influxes of long-term global capital. So what do those global investors actually require to fuel this next chapter of the ascent? India already boasts some great structural advantages, right? A huge domestic market, a massive growing pool of engineers, rising geopolitical relevance. But what's fascinating is that economists argue the next wave of investment won't just rely on financial incentives like those PLI schemes we mentioned. No, what investors crave above all else is predictability. They want stable tax regimes that aren't going to shift unexpectedly. They absolutely need faster dispute resolution in the courts. They're looking for deeper capital markets and just overall regulatory consistency. At this stage of the game, policy certainty might actually prove to be just as important as the GDP growth rate itself.
Which brings us to our final thought for today. The transformation from a fragile 5 nation to a legitimate global capital magnet is an undeniable, historic shift in India's economic story. The systems have absolutely been built. But as India chases that $10 trillion ambition, a really profound question remains. Will these massive macroeconomic growth numbers actually translate into broader everyday prosperity? Will the country be able to tackle those difficult, unresolved, politically tricky reforms to bridge that stark geographic wealth divide we saw at the very beginning of this explainer? Will it ultimately create better incomes and true economic mobility for its massive young workforce? It is a highly complex journey ahead, and it's one we will be watching very closely.